I'm still getting a lot of questions about what is halving. So I thought I would go over to the halving. We are about a month and a half since the third Bitcoin halving. We haven't quite seen the expected effects of that halving. A lot of people expect that the price of Bitcoin will increase in value shortly after each halving, including this most recent one. But since I have still been getting these questions about what exactly is a halving, I thought I would go over it a little bit. So I want to start with a quote by Satoshi Nakamoto, who said, "The root problem with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency, but the history of fiat currencies is full of breaches of that trust. The banks must be trusted to hold our money and transfer it electronically, but they lend it out in waves of credit bubbles with barely a fraction in reserve." That's a quote by Satoshi Nakamoto. Now, the pseudonymous founder of Bitcoin, Satoshi, designed the digital currency to be a deflationary currency. In this programmatic model, fewer Bitcoins are produced over time, and the digital currency will theoretically become scarcer gradually. Miners produce new Bitcoins with electronic equipment and receive Bitcoins in the form of block rewards. Every 210,000 blocks, the total number of Bitcoins that miners can potentially earn for their work is halved, that is, cut by a factor of 2. This takes place approximately every 4 years. Halving prevents inflation by slowing the rate at which Bitcoin are produced. Policymakers, on the other hand, control the economic policy of fiat currencies, leading to stimulus packages such as the $1 trillion during the global financial crisis, which was a bipartisan effort by George W. Bush and Barack Obama, and the more recent $8 to $10 trillion coronavirus response by the Federal Reserve under the Trump administration. Such policies, known as monetary debasement, can lead to a decrease in purchasing power, inflation, and hyperinflation. The underlying technology to Bitcoin, which many contend is the true innovation of the system, is called a blockchain. It keeps track of which addresses have how many Bitcoins. This distributed database is extended by one block approximately once every 10 minutes. The blocks contain all of the transactions. When miners reach consensus about these transactions that took time during the duration of a block, a new block is added. Bitcoin's issuance over time is transparent. We know there will only ever be 21 million Bitcoins in existence, and we know the approximate schedule by which they will be released, too. At the time of writing, approximately 18.36 million Bitcoins had been mined. Russ Roberts, professor of economics at George Mason University, detailed this policy in comparison with governments. Quote, "Elaborate controls to make sure that currency is not produced in greater numbers is not something that any other currency like the dollar or the euro has. That is considered very destructive in today's economies, mostly because when it occurs, it is unexpected. In a Bitcoin world, everyone would anticipate that, and they know what they got paid would buy more than it would now. Generally predicting when exactly a halving will come to pass is hard, for the time it takes to generate new blocks is not consistent. Between now and 2140, when the last of the Bitcoins is predicted to be mined, we expect there will be 64 Bitcoin halvings. Nakamoto set the Bitcoin protocol to start at 50 coins produced every 10 minutes, which miners receive in the form of block rewards. In 2012, this was cut to 25. In 2016, 12.5. And just this year in 2020, it was cut to 6.25. Any changes to these rules must require all Bitcoin nodes and miners to agree thereupon. When the last Bitcoin is mined, miners will still be needed to secure the network. Instead of being rewarded with Bitcoins, they will be compensated via transaction fees. The first halving took place on Wednesday, November 28, 2012, as the block reward was cut from 50 to 25. As this was the first halving in Bitcoin's history, the community did not know what to expect. Would the block reward decrease cause a supply shock, thus sending the price higher? This line of reasoning recognizes that miners must profit from the act of mining. If the block reward is cut in half, then the price increase must go up so as to incentivize mining. From performing calculations to mine Bitcoin to the real estate and equipment needed to store and maintain mining equipment, the process of mining is very energy intensive. Others believe halving and supply shock had been priced into the market ahead of halvings. Since the block reward schedule has been known since Bitcoin founder Satoshi Nakamoto released the protocol into the wild. Traders therefore anticipate the halving, purchased Bitcoins with the intention to sell them at a profit after the block reward had been reduced, thereby ensuring there would not be a major disruption to the supply of Bitcoins to the market. Bitcoin's block reward halved in 2016 for the second time from 25 to 12.5. Now, what effects do these halvings have on the price of Bitcoin? In early halvings, many people contended the cut in supply would lead to an increase in price, while others argued the halving had already been priced in. Ahead of the 2016 halving, the Bitcoin price increased approximately 15% in the 3 months ahead of the halving. In the hour before the first 12.5 Bitcoin block had been mined on halving day 2016, however, Bitcoin dropped in price by more than 5%. In the months after a halving, the price typically increases. Bitcoin gained 8,000% in the 12 months following the 2012 halving. After the 2016 halving, the price rose 1,000%. Whether or not there is a causation between halvings and price increases cannot be certain. For instance, interest in Bitcoin increases over time, so perhaps the price increases are the result simply of higher demand. Halving days are the source of much excitement in the industry. As early as the first halving, people were throwing virtual halving day parties. As they approach, there is increased attention placed on Bitcoin, particularly from within the blockchain communities. Some, to be sure, criticized the deflationary model of Bitcoin. The Bitcoin white paper, titled Bitcoin, a Peer-to-Peer Electronic Cash System, says that Bitcoin is an electronic cash system, but many argue that Bitcoin has evolved to become more like a digital gold, not a digital cash. So that is a store of value. They cite the deflationary nature of Bitcoin as a reason wherefore. With production decreasing over time, this encourages hoarding of Bitcoin, thereby undermining a spending economy. If the price of Bitcoin declines for a sustained period of time after the halving, it is possible that mining organizations with smaller reserves may begin to capitulate and shut down their machines and operations. When mining was done on personal computers, this wasn't such a big deal, as miners could simply turn off their computers or halt mining temporarily. However, today's largest proof-of-work network, Bitcoin, is run by a series of large pools and companies with expected revenue streams, cost of business, employees, and more. Though such a scenario could result in a short-term shakeout of mining groups, it is just as likely they could be replaced by new stakeholders. I wouldn't be surprised, personally, if several mining groups have anticipated a short-term price decline and have prepared accordingly ahead of these halvings, particularly this last one. We could very well see at the time of these halvings that some mining groups operate at a loss based on the assumption that Bitcoin price surges have historically come in the months after a halving date, not immediately after a halving date. So those are just some thoughts on Bitcoin halvings in general. Thanks for joining us today, and have a great day.